I'm pleased to be here today on behalf of the United States House of Representatives, where on Friday we delivered a unanimous Democratic vote to pass this Inflation Reduction Act.
The fact that the Federal Reserve is raising interest rates, the fact that the US economy is actually cyclically a lot stronger than the rest of the world, particularly Europe. The fact that if you look at energy prices in particular, gas prices in Europe have been skyrocketing. And so even though gas prices in the US are rising, it's nowhere near as much as they're rising in Europe. And I think you put all that together and it creates this perfect storm, if you will.
The United States took a bold step yesterday as Joe Biden signed the Inflation Reduction Act. What effect would this have on the economy, and what should you expect? Hey, welcome to the Wealth Supremacy channel, the #1 crypto and financial markets channel. Here we put investment and financial advice, economic situations, and prospects under the microscope, giving you all the tidbits you need to make your own informed decision. We're back with the investment guru Michael Saylor, who in his recent interview takes a deep dive not into just the economic situation of the United States, but takes time to talk about the interplay of global economics. He gives some serious warnings which investors should take into serious consideration before putting their money in any securities or property. This episode promises to be an eye-opener, and we're glad you didn't miss it. If you have not subscribed to this channel, please do that now and click the notification bell so you always get notified when we upload quality content like this. Let's get down to business.
The thing about investing in Bitcoin is you should only invest what you're going to hold for 4 years or longer. And ideally, it's generational wealth transfer. And then you should dollar cost average into it. And for the average person, if they dollar cost average into it as a strong long-term store of value, they'll be fine. And the metric you ought to stare at is probably rolling the simple 4-year moving average, right? And if you look at the simple moving average over 1,458 days, it very rarely touches that point. It went slightly below it in the depths of the crypto crisis, and now it's trading above it. That number is 22,266. So if you think of that and you say, I know I'm going to hold at least 4 years, then it isn't that anxiety inducing. If you have a short time horizon, like you want to make money in 4 weeks or 4 months, it's going to be much more stressful because it is a volatile asset. And the volatility impacts two types of people. It impacts people that are short-term investors, that they want to make a quick buck or they just never want to lose money. And the volatility also impacts public companies or companies that rely heavily on GAAP accounting, because the volatility is detrimental to the accounting treatment because you have to always write it down. You can never write it up. And so you end up with a circumstance where you could be holding $1 billion and it looks like you have $200 million and no one can tell the difference unless they go to the trouble to figure it out themselves, and that's very opaque. So I would say that people that really are fixated upon GAAP optics, right, they'll be a little bit troubled by it. And then people that have very short-term time horizons are troubled. But for the rest of the world, it's a pretty good idea. It's the best. I've just pointed out to you, we've outperformed every asset, every big tech company, every enterprise software company, 97% of all the companies using this strategy. So if the volatility is the price you pay for the performance.
While crypto enthusiasts and investors are excited about the rallying of Bitcoin and some cryptocurrencies in the past month, Michael Saylor thinks the volatility of cryptocurrencies, Bitcoin in particular, should be taken seriously. He's of the opinion that it's not at all safe for those who expect quick returns from the market. This does not mean quick returns are not possible, but as he clarified, it puts a lot of stress on the investor if the goal is a short term. His recommendation is to buy and hold for at least 4 years or more for good margins. His recommendation is indeed backed solidly by the history of Bitcoin so far. Looking at year-on-year margins, there are indeed a lot of negative margins, but Bitcoin has not recorded any year-on-year negative margin yet. In fact, the 2017 Bitcoin peak at the price of $13,062 was beaten in the 4-year period in 2021 at an even higher all-time peak of $61,374. Picking any point on the chart and moving 4 years forward has always yielded in multiples of the initial price. Just as Michael said, Bitcoin had actually outperformed any other assets and investments and has been a credible safe store of value over the years, especially on the long-term scale. Comparing Bitcoin, gold, and the S&P 500 in the past 10 years, the highest ROI possible for gold was plus 56%, and the S&P stocks did better at plus 277%. But Bitcoin blew the charts at a whopping plus 437,171%. Do you think by 2024, Bitcoin would beat its 2021 record of $61,000? Next, Michael Saylor talks about the DARE economic situation. Let's see what he has to say.
Cathie Wood coming out saying, we're definitely in a recession. I want to get Michael Saylor's thoughts on the U.S. economy, how you see things. Are we in a recession?
We've been in a recession since March of 2020. If you calculated or if you estimated the economy based upon real output and then you adjusted it for the strength of the currency, if the currency loses 20% of its purchasing power and the economy is flat, then you contracted the economy by 20%. So the currency's lost 40% of its purchasing power in the past 2 years. If the economy grew 5%, you're down 35%. So yeah, we're in a recession, but I'm not a macroeconomist, and I don't really care to engage in the debate about what is the definition of a recession or not. Right, it's above my pay grade.
Just curious to get your thoughts on the U.S. dollar, the strength of the U.S. dollar. Is it just the bell at the ball, the strongest horse in the race? How do you see it? Is it going to keep marching higher or not?
The dollar is the strongest medium of exchange in the world, and so it is strengthening against other currencies, but the currencies are the weakest store of value. The foreign currencies are weak store of value assets. So foreign currencies are collapsing, like South American currencies, African currency, Sri Lankan currency, Middle Eastern, Turkish currency, Lebanese currency, Russian, Ukrainian currencies. Russia, I guess, doing better because they're tied to commodities. But I think that you've got a basket of strong currencies to be pegged to the dollar, and they're losing 15% of their value or more a year against scarce assets. And then you've got weak currencies that are losing 15% of their value against the dollar, right? If we look, the South African Kruger rand, the Korean won, the Great British pound, the euro, they're all down 11 to 13%. Polish is down 16%, the yen's down 18% over the course of about a year. So they're collapsing against the dollar. And then the developing markets are collapsing 40% against the dollar. So do I think it'll happen? Continue? Yeah.
Is there anything so far in the earnings season or the economic data, anything else that would make you waver in your conviction of the growth trade?
Well, what we do see in these earnings results is that we are in a recession. And we've been calling for a recession for quite some time, a lot of it based on excess inventory. So we think this is an inventory-led recession.
Cathie Wood has been sounding the alarm on the precarious situation of the economy. We have featured some of her recent interviews on this channel and examined her warnings to investors and Americans in general. Something good you can invest in right now that would not cost you anything is to smash the like button and help our videos rank better so it can be recommended to others. Back to the video. Michael Saylor agrees with Cathie Wood that we're already in a recession. As a matter of fact, he thinks we've been in a recession since March 2020 when the COVID-19 pandemic hit the US. He highly recommends the dollar as the currency for those who want to save with a currency that is reliable, stating the fact that the dollar has performed well against most other currencies globally. This year we have seen the dollar valued over the euro for the first time in 20 years. Some currencies have even suffered more devaluation, especially in developing countries in South America, Africa, and parts of Asia. The dollar is the most reliable fiat to hold value so far, and it seems that it would continue on this trend. While it's true that the U.S. economy is on a decline, the dollar has not severely suffered as most other currencies have, as there are a lot of political and economic instabilities in other regions.
And if you need your money in more than 4 years, if you want to hold it between 4 and 40 years, you put it in property, and the best property in the world is Bitcoin, and the best currency in the world is the dollar, and there are weaker properties, like an Airbnb, or building or stock, and they're weaker because they've got counterparty risk and they've got tax risk and execution risk and competitive risk. And maybe they're not so portable. You can't really move a ranch out of Zimbabwe to San Francisco when you have to flee the country. So what can you move out of Africa to San Francisco when you want to flee the country, right? Bitcoin you can move, and the rest, unclear. So I think that the general macroeconomic trend, what can you say? You can say the economy doesn't work so well.
While the dollar is best for those who want to preserve the value of their money in a short term, those looking for high yields and aim to put their money down long term, then it would be better to invest in properties. According to Michael Saylor, the best property right now to buy is Bitcoin, because it comes with relatively low or no risk costs compared to assets such as real estate or stocks, for example.
The economy is not going to work well. The money supply is increasing. The Inflation Reduction Bill is, $600 or $800 billion worth of spending. Everybody's going to keep spending more money. Some currencies are going to collapse completely. The government's going to collapse with them. That'll happen in the developing world. That will result in capital controls. We saw it happen in Sri Lanka. You see in Nigeria and a lot of places now it's illegal to accept dollars for payment. So you're going to have capital controls, you're going to have export controls, you're going to have import controls, you're going to have wage and price controls. That will impair the economic machine from functioning more. As that happens, governments will print more money. As they print more money, the value of the currency will fall against scarce desirable assets. You can't print more energy, and so that's why you can't print more food. So certain things will have tangible value. The best idea in a world where it's very difficult to move cross borders and it's very difficult to manufacture things and it's very difficult to buy and sell things, the best idea is digital energy, you see. Because once you convert energy to a block of encrypted energy, and that's what Bitcoin is, you can hold it forever with no maintenance cost. And you can transport it anywhere in the world for no transaction fee. Everything else is more expensive. The average person can't hold 100 barrels of oil for a decade. You can't warehouse oil. You can't warehouse soybeans. And if you operate a business, you might wake up and find out that your business is not allowed to export or import or manufacture or something. And so all those other parts of the economy, they struggle with these headwinds, and you have to take them into account if you're an investor.
The Inflation Reduction Bill he talked about has just been passed into law this week by Congress. This would see injection of funds into key sectors to keep them afloat. According to Forbes, estimates show that this bill would not do much to curtail the rising inflation, but would help accomplish key initiatives of Joe Biden, such as affordable health care. Michael Saylor warns that many currencies would experience a complete collapse, and this would lead to collapse of the government of affected countries. We're already seeing this with Sri Lanka as an example. There are also signals of this happening in many African countries. In response, these countries would try to salvage the deficit by printing more money, but this would only cause inflation to rise further. This is one of the reasons why he thinks Bitcoin is still the best investment for now, because it cannot be overprinted at will and hence cannot suffer as fiat would suffer from government actions to curtail economic downturns. What do you think? Do you think the recently passed Inflation Reduction Bill would checkmate the downward spiral of the economy? And what do you think we can expect? Leave your comment below. We'd like to hear your opinion. Don't forget to like and subscribe.